you've heard a lot already, some of which I'm going to probably cover as well, although the focus of what I'm going to concentrate on will be the 2015 passport process and equivalence. Why am I going to concentrate on that? Well, first and foremost, equivalence is part of a strategic narrative that the island is currently engaged in. It's not just the AIFM where we need to embrace, or to use the word of the morning, or at least engage in a better relationship with the European Union. We have a number of other issues where, frankly, over the next few years, seeking and gaining equivalence from the European Union will underpin much of our current offering to the world. And just to give you a few examples of those other areas, we have the single European payment area, where we'll need some equivalence recognition. We have auditor oversight for Jersey-based auditors who act for EU-quoted companies on EU exchanges. And of course, we have anti-money laundering and CFT, countering financing of terrorism, equivalence to seek to demonstrate that we are at least as good, if not better, than the EU in terms of their own third money laundering directive. So I'd like to concentrate on the equivalence, but what I'd also like to get across this morning is a message that the Jersey Financial Services Commission does find itself at the centre of the web here. We recognise that we have a significant responsibility in delivering equivalence in terms of AIFM in two different stages. First and foremost, to maintain the status quo post-2013, and then, of course, the passport from 2015. So an absolutely critical message I'd like to get across to you this morning is that, yes, we do get it. Yes, we recognise that this is, in effect, in our national interest, and that the Commission will be at the centre of events and will move every possible stone to make sure that we remain in the game. A large part of that will be these cooperation agreements, but I reassure you, most of them are already in place, with one or two exceptions of all of the key markets that James mentioned in his presentation. So what do we know at the moment about Level 2 and, in particular, third country equivalence? Well, obviously, Level 2, as you've heard, 438 pages, only out about a week ago. And it does not critically include the discussion about the third country measures. And I think that that was done deliberately. Giles will no doubt confirm whether I'm correct or not. But the subject of third country equivalence is itself going to be a major significant item. And I fully understand why ESMA might want to achieve some degree of separation from the main rulebook and that particular dossier. We do expect that a key document about the third country detail will be out later this summer, sometime during August, we believe. And I believe Giles was at a meeting of ESMA on the subject yesterday, and I'm sure and I hope he'll be able to tell us a little bit more about it himself when he comes on stage in a few minutes. If we look at the third country detail a little bit more closely on what we do know, Stephen Major, chairman of ESMA, has indicated that the IOSCO, IOSCO, of course, you will know, is the international standard setter for securities regulation, that the IOSCO MMOU, of which Jersey is a founding signatory, could be used as a starting point for assessing equivalence. Well, obviously, we meet that test, but a major deficiency of the IOSCO MMOU is that really it only deals with information exchange on individual cases. It does not deal with a major issue in relation to this whole AIFMD, which is systemic risk. So the information being shared is not at the current time of the nature of systemic risk information sharing. So something will have to be done there to upgrade that instrument in order for it to be effective. We do not yet know from the ESMA debate whether equivalence will be assessed bilaterally or multilaterally. And when I say multilaterally, I mean the EU as a whole engaging with a third country. Multilateral agreement would make sense for the smaller member states. So, for example, Latvia with the United States, rather than trying to negotiate that individually, it being done through the currency of the European Commission. Both, that is to say, multilateral and bilateral, might be a mixed blessing for Jersey because there will be a queue. And we do not yet know where we will be in that queue. Pretty obviously and logically, the European Union is likely to start with its major trading partners, such as the United States and Japan. But we will have to see. Quite a key area for us that we're focused on at the moment is that ESMA appears to be interested in demonstrating equivalence of outcomes. And I think actually that James used that phrase, equivalence of outcomes. So if, for example, our current regime is assessed at the headline level on areas such as AML, cooperation agreements, tax information exchange agreements, what we already know, if you like, we would fare well. On any objective test, I think we would fare very well. If we have to implement, if you like, copy and paste the entirety of the AIFMD rulebook for our AIFM product, then I can guarantee that we will be able to do that and that we would objectively be able to meet the rest of the requirements. But do, of course, bear in mind that that will have a major impact for us at the Commission and for you as presenting your request for authorisations in terms of those authorisations and in terms of subsequent supervision of entities and products. We will be entering a new world there. As you've heard, some aspects such as equivalence, supervisory cooperation and delegation we need to meet by 2013. And the other date we have in mind is 2015. That's not actually very long in which to work in this space. And one area we have focused on that might assist us, and I say might assist us because we don't know, I am largely speculating here, is to ask IOSCO if their self-assessment against their own revised principles and methodologies for security supervision could be another suitable route for us or other third countries to demonstrate early equivalence. Now, we have thought about this in advance, and for the last year or so have been in a dialogue with IOSCO and the Secretariat of IOSCO to make sure that we are already in that queue if, I underline the word if that is a route that we can use in order to be able to demonstrate equivalence in the EU space. We've got ourselves onto their list of jurisdictions that will enjoy what is known in the trade as an assisted self-assessment as soon as IOSCO completes its own work to finalise the revisions of its own principles and methodology. And if that goes ahead, we would expect it probably to take place sometime during 2012. I believe there's also a concept of an ESMA peer review process within the directive, but we're not quite clear yet about that, whether it would be an annual process or what. And we're just really at the stage where we're trying to look at the field, survey the field, and see what options might be open to us and make sure that none of them are excluded at this point. Final area I'll just touch on here in terms of what we know is the directive has a concept in it called the member state of reference, where non-EU AIFMs market AIFs into Europe, a European member state of reference will be needed. I mean, it's akin to a sponsor, if you like. And you might immediately think that the UK is the obvious member state of reference for the Channel Islands. That may be the case, it may not. It would rather depend on the circumstances at the time and which market you want to start with. Rather more worryingly, there is an ability, I believe, for other member states to veto third country applications in that sense. So I think we're very concerned about a sort of potential competitive bidding process that might arise out of that. I think we're going to be seeking quite a lot of reassurance in the forthcoming consultation on that issue. ESMA would have an arbitration role in such circumstances. So that's what we know. In terms of the Commission's engagement, you've heard a little bit about bilateral agreements, and I hasten to reassure you again that many of those are already in place. I've talked a little bit about the IOSCO engagement. I mean, we're a very active jurisdiction in IOSCO. We punch well above our weight in that respect. We recently hosted, for example, Standing Committee 5 of IOSCO. It's a large working group, 32 regulators worldwide here in Jersey. Regular attendees at the European Regional Committee and all various other IOSCO engagements, and we actually play an active part in the revision of the principles and the methodology for our membership of the Implementation Task Force. So the IOSCO relationship, if it will assist here, is already very well advanced. You're about to hear from Giles from the FSA. Giles and his colleagues on the funds policy team very kindly met with us on Monday, and we have a regular dialogue, and from my perspective anyway, an absolutely excellent relationship, and we're very grateful for the support that the FSA has given us so far. We're working hand in glove with the Guernsey Financial Services Commission and the Isle of Man Financial Supervision Commission, I beg your pardon, and looking to make a joint approach actually to ESMA for an early meeting, all three commissions acting together. In terms of local stakeholders, obviously well integrated with JerseyFinance, Jersey Government, and through them jointly working with the Channel Islands Brussels office. And finally, ESMA itself. Well, we haven't had any direct engagement to date, but the Commission does have knowledge and previous relationships with some of the key players, and that will assist. We have responded to earlier consultations, and of course we will be putting in a Commission response to this consultation. And if there is an open hearing, as I hear there may be, regarding the third country dimension later in the summer, then of course we will attend. So the JFSC position, do we know our response yet? No. Are we actively engaged? Yes. Are we concerned? Well, on the headlines, re-equivalence, no, we're not concerned. But on the details, I have to tell you, we just don't know yet. And even post-publication later in the summer, there will certainly be a number of areas which will require further clarification and no doubt a few further hurdles to clear. The Commission takes the philosophical view that the intentions behind the directive are the right ones, which is a harmonised and stringent regulatory and supervisory framework for the activities of all AIFM, which include common requirements governing the authorisation and supervision of AIFM. We believe those are the principles that we already work to here. We do need to see the level 2 detail regarding third country to consider our next steps. And as ever, we're regulators, so we'll be somewhat cautious about commitments that we can make until then. The final detail we have heard will be available in November, and then of course it will need to go through various stages in the European Council and the Parliament. And then of course we will have the level 3 stage. So this is absolutely a marathon and not a sprint. We will continue to work with industry in a number of key areas of funds policy to ensure, as you have heard, that our regime is attractive. We will make the necessary arrangements to ensure that it will meet the compliance requirements of the AIFM in order to allow that option, but at the same time that it will continue to meet all other international requirements. So I would like to just end this short intervention by reiterating my essential message. We recognise this is in Jersey's national interest. We recognise that equivalence in this space is critical, but it's also critical in a number of other areas, so it all works in the same strategic direction. We certainly get it at the Commission level and will be giving it the utmost priority and attention. And we look forward to working with all of you and also with our partners here to make sure that Jersey is indeed successful in this very, very important endeavour.